All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right, everybody, welcome back. My favorite time of the month. First day for our monthly prep. I'll explain to you why I love doing these monthly prep videos. In addition to that, this is also going to be referring to our quarterly review as well, started Q4. So I will explain in full depth and detail as to why I think taking a look at it from this lens is probably the most important way in terms of finding setups and breaking them down from higher time frame down to lower. So before anything else, do me a huge favor. Go on X, quote tweet this live stream, say whatever you want. I will retweet it. Let's get the word out. Let's help some poor souls who have no idea what they're doing. Let's real quick, we'll run through one of these. So this weekly / monthly / quarterly prep is brought to you by The Real World. So The Real World is a great way for fresh graduates to make money online. When is a better time to start a business than if you've graduated recently or in a job that you currently hate? For $49.99, thousands of people are making money online. And for graduates who don't feel like college has taught them how to build a business, The Real World is the answer. I'm sure if we did a show of hands, there would be very many people who would agree with that. But that is The Real World, $49.99 a month for to learn how to build an online business. So let's roll. Oh man, I love the monthly prep. All right, let's roll. First and foremost, we'll pull up NASDAQ. We'll look at it from a large scale. If you don't trade futures, that is A-okay. We're looking at tech as a whole. And if you're looking for a specific ticker that would relate in terms of how is this useful, you could look towards QQQ. Price movement's going to be the same. The only thing that you're going to notice that is different is that you have the numbers are very much different. And beyond that, also, you're going to be a little less gappy in terms of how we can look at this from a wide scale lens. So let me just do this, and I want to see if that should look a little bit better. Hold on, I'm going to shrivel up this real quick, but this should be much more clear for you guys watching at home. Now, if we're to look at where we currently finished last month, very nice upwards up close candle. Respected last month's bullish order block right here. So down close followed by an up close candle that closes above the open of the previous. Okay, wick down into it. I don't love these lows, but I also don't believe that this bull train is over quite yet. We'll get deeper into that when we look at SPY as well. But if we were to zoom out and we could just notice that, historically, we had our price run from our COVID lows up to our highs back in 2021, leading into our quote unquote bear market that brought us down into discount of a bullish range. There's your bullish imbalance. There's your run for highs. And there's the completion of the Mando model. So now really at this point for me, I would prefer a discount retracement into a bullish imbalance for that next leg higher. But how can I break this down and make this, as bulletproof of a setup as I possibly could, right? Well, the first thing that I always tend to look for when I'm looking at it from a monthly perspective is, did we create some sort of monthly bearish imbalance? When we get that monthly bearish imbalance, that's going to indicate a lot to me. That's, historically, and again, this is something you can go back and test for yourself. But every time that we've gotten an imbalance on the monthly time frame, that has pretty much been your indication that price is going to go down into discount. We do not have that here. And I'm not going to be the guy who's trying to jump in front of the bull train here and call top or anything like that. That's not how I operate. I would much rather, quote unquote, be a little late and then get my retracement back into that bearish imbalance for my next play. But at this point, nothing is suggesting lower as of yet from a monthly perspective, right? Smaller time frames could show more fluctuations in price. But right now, I don't see anything that's really indicating that we're looking lower at this moment, right? That monthly bearish imbalance is going to form at some point. But again, I'm not going to be the one to try and call that out and jump it. I would prefer it to show me. And from there, I can operate following. But So far, so good. No imbalances have really been formed either. We are in the process of taking out the July Open, which is pretty encouraging for the Bulls. But to me, I believe we have another high in the tank here coming forward over the next couple of weeks. Now, the $1 million question, and the question that I led off with, and really what I wanted to jump into and get a little bit more in depth on, is I am a huge believer that using the higher time frame to structure your smaller time frames idea is huge. Okay, and what do I mean by that? If we can identify the draw on liquidity, or where price is likely to go to next from a higher time frame perspective, to me, that is the secret sauce. That is that meme that we posted a couple weeks ago of Bugs Bunny with Michael's secret juice from Space Jam or whatever it was. But to me, if I feel like I'm on the right side of things, looking at it from a larger perspective, I can drop down in time frames while using that higher time frame bias and base my ideas off of that. So that doesn't necessarily mean you need to buy this low dating back to October of 2022 and not sell it until we reach the high of here. I'm not saying that. But if you have the proper draw on liquidity, you have the right idea as to where price is going, then all those intermediate trades, they can kind of be set up with that overarching thesis or idea. And I think that's really important. And I think a lot of people refrain from looking at the higher time frames because you're thinking, oh, it doesn't matter, I'm just looking for a smaller time frame scalp. Well, that's all good and great. Oftentimes that smaller time frame scalp is probably not going to be good enough for you, right? You're going to see, I thought I was going to make more money on this, and you're going to hold on to it. You're going to be fighting an overarching trend, and you're ultimately going to get hurt as a result of it. So I am a huge advocate for looking at the higher time frame, mapping an idea. And if I can't map the idea on the higher time frame, I tend to avoid, and I tend to move on to something else. There's a whole lot of things that we can look to trade. It doesn't necessarily have to be one name and stick to that one name forever. One thing you will notice, though, is that many of the names that I do tweet about, whether it's over the weekend or throughout the week or in the group or in that subscribers tab, a lot of the names are the same. Okay. And there's a reason for that, right? Of course, you're going to get smaller time frame fluctuations. But if you feel as if you have the correct higher time frame draw on liquidity on something, you can revisit those names when they've reached your discount levels, specifically imbalances that you're looking for that move off of, right? So, for example, one thing that we've been talking about forever, or for a long time now, has been Tesla. Tesla's a name that I feel as if I have a very good higher time frame thesis on that name, and so far so good. AMD is another. That's another name that I've been focused on for a while now. It's setting up very nicely. Ultimately basing that idea off of what we have on the higher time frame. So we will get into individual names as well. I have a few that I want to show you guys, and then I put something else out that you should or if you want, you can comment on, and I will get to those requests that you guys all have. But to me, this always leads off with me looking at NASDAQ and SPY, or the S&P. So for SPY, let's pull up over here, and it's very similar in terms of what my overarching idea here is. Okay, the only difference that you have with NASDAQ versus ES is that SPY recently took out its all-time highs while NASDAQ did not. Okay, we could have a little bit of SMT divergence. And if you've noticed, and if you watch Morning Brew at all, you'll notice that we've been talking about that Showtime imbalance for a while, and price has gotten up into it. And that was what we kind of closed week to end last week on, after price got into that level and soon after retraced. But that's really the main difference that I'm seeing between the two at this time. But very similarly to what we were talking about before on NASDAQ, we have no imbalances to the downside. Nothing is really suggesting that price is going to retrace at this point. And to be honest, S&P setup, it looks a little bit more clean than what you have on NASDAQ. With NASDAQ, these two little lows that you have are relatively equal. That's a little ugly. I'm not a huge fan when that happens, right? But if you were to look at SPY, it's much cleaner. You had imbalances to justify the bounces, not just an order block, which, is not really an entry model for me. But it's just, to me, a way that I can map out everything prior. Okay. So really just looking at it from afar right now, and I'm just going to shift up our previous all-time highs little line here, but That level here at 5,669, if we're going to actually see a real continuation moving into the next couple of months and maybe even the next year, right? I really don't want to see price get down to that 5,669 over this next month. And the reason for that is if price on the S&P retraces to 5669, that will prevent the creation of a bullish imbalance. If we were to form this bullish imbalance, that to me is going to give me a little bit more confidence that this is going to be a continuation type rally, not one that's going to be snuffed out and short-lived, if you will, right? I know there's a lot of things coming up in the news with election coming forward. I'm sure we're going to get a couple surprises here now that we're getting into October. But one thing that I will say is I personally don't see, oh, this side won, the market's going to do this. I really don't see any indication of any of that occurring at this time, right? And how could it be different? I guess that would be the question that you could ask. How could that be different? And to me, the way that I would explain that would be, well, look, if we had formed some sort of bearish imbalance leading into the election, we started to move higher. And ultimately, election happens, we get into the bearish imbalance that we just recently formed and then collapse, right? Everybody's going to want to use the election as an excuse as to why price did what price did. But we don't have that here, right? We don't even have any imbalance to the downside forming, right? We actually have the chance of creating a bullish imbalance here on the monthly when looking at it from the S&P point of view. So to me, again, I think that's going to be the excuse for a lot of things. And if you've been here a while, I hope you start to see that these excuses are pretty recurring. And, despite those excuses, I think I've done a pretty good job of explaining how this is really not random and that price really tells you a lot of information, and people just use the news and whatever earnings and all of that stuff as just a way to justify moves, when in reality, if you just look at a blank chart and map your levels, you're going to see price movements and you're not going to remember what happened. Whoa, what happened here in April of 2024? I don't know. All I know is we got into a monthly bullish imbalance and we took off since, right? So that point of view, that frame of mind, I think is very helpful for those of you who are continuing to try and actually learn how to read price and not rely on other people to do it for you. But that's why I'm, sometimes I go off on tangents, but I try to be as thorough as possible in my explanations, because not only does it help me selfishly, me building a thesis is important. I think everybody really needs to be able to form their own thesis on something. And that's really using whatever methodology you want. But to me, price is all I really need in order to form those ideas and operate off of them. So anyways, that's my breakdown there on S&P, NASDAQ, how we're approaching the next month. One thing, again, the biggest thing to me really is to see if SPY creates that next monthly bullish imbalance. To me, that's really encouraging for bulls moving forward here. I know everybody wants to call top. Oh, we're so extended, this, that. Right. Okay. We can all agree on that. But here's the thing. Until price shows me otherwise, why am I going to try and jump in front of a moving train? Not only am I missing out on that continued upside, but I'm also getting stopped out of my shorts as a result of that. Think about how many people were trying to short this thing all the way up. This is from 3,500 all the way up to 58. Okay. A lot of stop outs from people trying to jump it too early. So to me, the way that I kind of justify this is why am I trying to jump it? Why not allow it to show me that it actually needs to go see discount? And at that point, fantastic. We can operate off of that too. But jumping in front of that moving train does not sound like a great idea to me at this current time. So that's just a breakdown on the indices. Now, for a few individual names, let's rip open. Let me just see the chat and make sure everybody's good. All right, cool. Yes, please like the stream. If you're watching this wherever, like it. Let me know if you had if you got any thoughts or anything like that. Comment them. Feel free to do so. And if you do quote tweet this stream on X, I will retweet you. So let's keep on rolling here. Let's get into one of my favorite names here, and it's Tesla, of course. So let's look at Tesla, because I think this is one of the most eye-opening setups going into the final quarter of 2024. So early on in the year, Tesla was a little bit of a slug, but ultimately, following that second retracement down into discount and the turtle soup move, which is a liquidity sweep in the inverse direction of your overarching trend. Okay. Now, last month, very strong for September, closing outside of our final bearish imbalance here on the monthly time frame. Very, very, very encouraging. Okay. And now if you were to look overhead, I know people in the group are going to be able to get this no problem, but for those of you who aren't and are, interested, I want you to, if you have a sticky note, write it down right now, right? And date it November 1st and just write revisit September or October monthly prep by Mando Trading. Okay. And we're going to come back to this, but I want to just kind of walk you through this because we have something called, or at least the potential for something called a low resistance run for liquidity. Okay. And what that is when you have little highs like we have here, right? You see all these little swing highs that we have. Now, why are these relevant? The relevance behind these are that in between these swing highs or these pools of liquidity, buy side liquidity to be specific, you have no imbalances on the current time frame that we're looking at from a monthly perspective. There are no bearish imbalances. This was the last one. We ultimately order blocked up and through. Very encouraging. But with these swing highs and these pools of liquidity without imbalances in between, I view this as a low resistance, right? Resistance would be something like this. Low resistance run for liquidity. And that run for liquidity gets you up into 314.67. And that's until you see the next bearish order block right here. But until then, no imbalances on that monthly time frame. Now, could this take more than a month? Sure. But the idea here is that Tesla, to me, looks very primed for that next big step, right? We began to take it a couple months ago here when we made that high wick, ultimately pulling back inside that monthly bearish imbalance, retracing down lower, rebalancing this level here before taking off yet again. So Tesla, it has been for a while now, but it's still got to be my favorite name. And to me, again, this is not to say, look, I have Tesla shares. I'm not currently any options contracts or anything like that. But the way that I look at this is if I feel as though Tesla is going to move higher, that when we get those smaller time frame retracements into discount imbalances, I'm very confident in taking those long as a result, knowing that my monthly draw on liquidity to me is higher. So I'm structuring my smaller time frame ideas based off of what I'm seeing here on the bigger picture. Does that make sense to everybody? If it does, please let me know in the comments or in the live chat. But that's Tesla. Really nice. Let's pull over on the weekly time frame. So of course we're going to drop it down into smaller time frames and see. So if we were to look at it from a weekly perspective, you have your low to your high. You have your discount retracement into a bullish volume imbalance right here, and also held on to your month or weekly bullish breaker, low, high, lower low, break up and through, retracement back down into that breaker. We would anticipate that acting as a support level moving forward. Indeed. See you later. Okay. Mando model here on the weekly time frame completes at 271. Now, if you were to go back on X and you type in @Mando Trading with the $ Tesla, go back to that first week of August and see what I said about Tesla then. Okay. So I just want to show you guys that this can be seen before price actually does what it did. Okay. It can be anticipated in advance. Of course, that doesn't just mean, oh, I'm going in, I'm just going to drop everything and rally right into this, not really looking at smaller time frame entry points or anything like that. But it can be anticipated. And that's the goal here, right? I have no idea any news that came out on Tesla from here, no clue, don't care, doesn't matter to me. We formed our first imbalance that told me we were seeing discount, right? Just like we talked about on NASDAQ. Here's your discount. Goodbye. 271 completes the Mando model on the weekly time frame for Tesla. Okay, so let me go over it here into the chat really quickly and make sure that everybody's all good with that, and then we'll go on to our next name. I only have a few that I really want to dive deep into, but Tesla remains one of my favorites. So Makes sense. Good, good, good. Very nice explanation. Thank you. Yep. Good, good. Trade with the trend. Sure. So Henry D, there's something. Yeah. Snaz, you beat me to it. We know the trend before it's a trend, though. Absolutely. Right. So, a lot of people on X will talk about how, don't fight the trend, trade the trend. Your trend's your friend, right? All of this stuff. But they can't even explain to you how you would actually consider, like, how do I identify a trend? How do you identify a trend? Really? Do you just look at it and see it going higher and you say, oh, that's a bullish trend? Or do you look at it going down and say, oh, it's a bearish trend? Like, how do you do it? Right. And really, to me, the most simplified way for me to do that is to look to my left and see if we have any of these swing highs or swing lows that were taken out previously with a price run. Okay. So you can look down, and if you look down from a smaller time frame perspective, what you saw from, about midway through last year was, you got your first market structure shift by taking out this low. You got your bearish range, and this is just from a weekly perspective, right? We're still in an overarching monthly, yearly bullish trend, but we have smaller time frame price fluctuations. From your high down to your low, here's your discount retracement into a bearish order block, bearish imbalance. There's your flush through lows. That's a completion of a bearish Mando model, right? I know I don't talk about this one all that much because we haven't seen it as much, but it is 100% absolutely there. Here it is again. We took out this low with that price run. Here's your retracement into a discount bearish imbalance. There's your flush through lows. The Mando model is complete. Okay. Now, at some point here on these smaller time frame fluctuations, you're not going to be anticipating this to work anymore. Why not? Well, this is the importance of looking at something from a higher time frame. If you were to look at it from the monthly perspective, these smaller time frame fluctuations in price that you're seeing on Tesla do not shift market structure on higher time frames. So these little bearish price runs that we had from a weekly perspective, all that was what? It's getting you down into discount of your bullish price range on your monthly time frame. That's all. So you see how the top down is that much more important. And to me, I'm always going to pivot towards my higher time frame analysis, right? To me, the monthly is going to overtake what we see on the weekly. My weekly is going to overtake what we see on the daily. My daily is going to overtake what we see on the hourly, and so on and so on and so on, right? But that's just, to me, the best way for me to break it down. And at what point, right? Because we were pretty bearish here on Tesla for a while, but were we really? To me, all that is just a discount retracement, right? I don't think it's right in the moment. It's gonna feel like, oh my god, we're so bearish on Tesla right now. Holy shit, right? I got some tweets saved. Don't worry, I got some tweets saved. Somebody tell Elon Musk uh, Tesla's pronouns are was were. Hmm. Yeah, that was at about I think $200. We are now $61 over that. I mean, come on, come on. This is a person with a Discord too. Come on, crazy. But anyways, um, but if I'm looking for swing highs and swing lows to be swept, to me that gives me that's the game plan right there. That's the sauce, right? We took out this high with what price run? From your low to your high. Here's your discount retracement, right? Anything 50% or below would be discount. Do we have a bullish imbalance here? Indeed. See you later. Gone. Mando model complete on the weekly time frame. Here's your next low to your high. Here's your discount retracement into a bullish imbalance and bullish breaker. Run for highs. Almost there. We'll be there soon. Come on. Higher time frame analysis comes into play. It's a beauty. Okay. So before we keep going on, I'm going to cut off all the other places. So we're going Rumble only. Come on over to Rumble, rumble.com/Mando Trading. I'll catch everybody here in a minute.